What is up, investors? Back again, another stock analysis. This time we're taking a look at Shopify, another high flying stock. Take a look at this one. Boy, this looks like a mountainside here. This stock has rallied hard and it has a massive valuation of about $87 billion. Forward PE here, 1,339. So, not for the faint of heart. Certainly reminds me of investing in Amazon shares a few years ago. You really kind of had to hold your breath and jump right in. Now, let's zoom in a little bit here, because I think if you want shares of this, you want to get it on a pullback. Now, this is hindsight now. I mistakenly didn't take a bite of the apple when when these shares pulled back here in March, like almost all stocks did. And that was kind of the problem. You had almost your entire portfolio pull back in March. And so you were probably taking nibbles and bites on all kinds of stocks. And so unfortunately, I didn't do it with Shopify, because look at this. There's just all this demand here at this $300 a share range, and that's about where it dipped back to. And so I think this was a great buying opportunity. If you took a chance, even if you were a little early and you got it at 400 or so, just pat yourself on the back. That was a nice move because there was a lot of demand for shares here. Now, what I am seeing, kind of, if we zoom in here a little bit more, this is starting to round out a little bit, and we kind of see it here, and the shares dip down, obviously due to COVID-19, but maybe, again, I'm not rooting for anybody's shares to go down. I'm rooting for this to go down because I'd like to take a bite of this. And at $700 a share, okay, obviously if you're buying fractional shares, you buy half a share or something like that, it's not that bad. But I'm trying to, get a couple shares at least, and that eats up a large portion of your portfolio. And you'd like to get it at a good price because this thing has swung around. It has a 52-week low of $277 and a 52-week high of $844. So that's a big, big range. So you don't want to get caught anywhere in between there. So I'm not trying to time the markets. I'm just letting you know what I'm seeing here as an investor that like to buy shares of Shopify. Obviously, if you bought shares of this way back when, who cares? I'd go grab my golf clubs and go play golf if you grab shares back here. But I'm not one of those people. I'm trying to get my first couple shares of this, and so I'd like to get it at a good price. This valuation, as we'll see moving through these financials, is a hefty, hefty, hefty valuation based on everything, profits, revenue, everything. Now, what's interesting is they just raised some more money by issuing these shares for $700 a share. This was back on May 8th, so not too long ago. Actually, shares were probably a tad bit higher, and so they were able to get some insiders to buy some shares at $700 a share, and they raised about $1.3 billion. So when we look at the balance sheet, you'll notice that, boy, they sure did shore up the balance sheet, and this stock is very healthy in terms of cash on hand and financing its growth going forward, and part of it has to do with this fundraising. Also, buying in at this rich valuation, this rich price. Well, look, some very sophisticated investors just bought in at $700 per share. So it's not necessarily that out of the question. So first, let's take a look at what I always like to do is go by year by year by year, get a trend, see how these revenues, see how expenses, if there's any profit, what has been going on year after year. Then what we're going to do, jump into the most recent quarter we're here that just ended March 31st. Take a look at that. See how things are trending for this year. I also have some guidance that they issued for the full year. Now they pulled that back recently, took that off the table, but we'll see how accurate that might end up being. So here we go. 17, 18, 19, as we see here, revenue is steadily growing. It actually did, it actually accelerated maybe a little bit here. So you like to see that. That's on the subscription solutions. I think this is people that pay the monthly service charge for a Shopify store. Now, I should say, full disclosure, I actually have a Shopify store. I actually run a business. One of my business actually runs on a Shopify store. So that's also why I'm familiar with this company. But that brings no bias to how I'm looking at this. Merchant Solutions is here. As we take a look, this is trending up nicely. I think this has to do with sales and things like that. And so this is ticking up as the volume is going up on the site as well. We get a total revenue. They ticked up over $1 billion in revenue, and that ticked up, it ticked up what? That's almost exactly 400 million right there. And this is almost exactly 500 million. So they actually are. What I love about a growth company is if they keep accelerating these revenues. Okay. So when those revenues start to flatten out, that's when I get a little concerned about paying a really, really rich valuation. This is why I have no problem paying a rich valuation for Amazon, because they keep accelerating this revenue growth. And that's kind of what it's not like, foot on the floor accelerator with Shopify, but this is accelerating actually. So you like to see that 1.5 billion in that's, you call that sales if you want. Okay. And remember the valuation is $86 billion. So you almost have to swallow a little bit when you say that, because that is over, I can't even do the math. That is like 60, maybe even close to 70 times revenue that you're paying on a valuation. That is stretched valuation. So, but anyways, we'll look past that. Cost of revenues. This subscription solution is a very high margin business. Take a look, 642 in revenue, only cost us 128. That's very nice. Now, merchant solution, not quite as high margin, more of a commodity business at 935, cost you 584. But we also have some loan losses somewhere down here. I don't know if I have them on this table, but there's some other losses that I see related to this. I think we'll see them over in here. Transaction and loan losses they have here. It actually accelerated here. I think you could almost bolt that on to the merchant solutions cost. But anyways, we'll move past that. Total cost here of our revenues is 712 minus the 1.5 billion, call it 1.6 billion that we made. And we get a nice gross profit here of 865. That grew nicely. We went from 380 to 596. That's about a 210 increase. And then we grew it again a little bit more than that, actually. So that's nice. So we're growing gross profits, growing revenues at a little bit faster clip. And as they get bigger, that's actually harder to do. So I can see why these shares continue to get bid up. These financials aren't, looking past the extensive valuation you have to pay, this is looking pretty nice to me for a growth company. So let's just zoom down to the bottom line. They are losing lots of money here because you have sales and marketing. That has trended up, but it kind of flattened out a little bit here, at least a little bit. And let's see, research and development also seems to flatten out just a little bit. And this as well, general and administrative, considering this is accelerating just a little bit, the fact that these seem like they're ticking up in line is good. Now, you'd like to see these eventually plateau. That would be nice. And then we'd really start to turn the corner in terms of valuation with Shopify. Whether or not that happens anytime soon, I don't know. But again, you have about $1 billion in operating expenses plus this 865. And then obviously we're at a net loss here for the whole year of about $124 million. Not that bad. Again, it did accelerate year over year. You see, we lost 40 and then 65 and then this 125. So that's not that great. But again, this is a growth company and you're expecting them to grow. Now, what I wanted to do is take you back a little ways. They gave full year guidance. They pulled this once COVID-19 hit. They pulled all of this off the table. But as we'll see in a minute, I think they're going to actually achieve this and maybe exceed it. This might have been a sandbagging number. They expected for the full year of 2020 to have between 2.1 and call it basically 2.1, maybe $2.2 billion in revenue. As we see here, this is 3 months ended. This is the most recent quarter. They're looking quarter over quarter view here, and this is in thousands. So we had the subscription solutions that ticked up nicely. We had merchant solution that ticked up nicely. And then we see our total revenue here ticked up to 470. If you annualize that out, I'm sure the fourth quarter is really good for Shopify because they have more transactions and maybe more stores coming online. But this is annualizing out very close to this $2 billion range. So I have a feeling they're actually going to meet, if not exceed this guidance, but they did pull that off the table. Just want to make note of that. Now, again, going through the most recent quarter here, a subscription solution, huge high margin business. Look at that, 38 million, and you made 180, call it 188. Man, that's great margins. Even on the merchant solutions, you have 282 million in revenue, and 175 in costs. Okay, not every business can be super high margin. Now, I think you have these loan losses that are probably related a little bit to that, and so you can kind of almost factor that in. We've got a gross profit here of 256. That's versus a prior year of 180. So that's growing nicely. Gotta love that. So let's take a look at these operating expenses. Again, we'd like to start to see these plateau. That ticked up here. Research and development ticked up nicely. General administrative ticked up as well. These loan losses really accelerated. So we'll see. Obviously, some of that is COVID-19 related because businesses start going out of business. They don't pay their bills and pay their obligations. And so that could be some of that. And hopefully that doesn't choose. It's a very small number in comparison to the rest of these. So as long as this number stays in this range, maybe it could get even a little higher. It's not too much to worry about. Obviously, we have a loss from operations when you've got 330 million plus 256 in costs and only 470 in profits or revenue, and we get to a net loss of 31 million. Now that's not much over. Okay, look, they went from 24 last year to 31, so that is an improvement. That is nice. Obviously we have a little bit of dilution here, but losing 30 million again for the full year. We saw that they lost 124, so they're on pace to almost kind of, if you times this by 4, you're at about 100 and call it $124 million. So, it's, that's not bad. If that holds its line, that wouldn't be too bad. Now, last thing I want to go over before I tell you buy, sell, or hold on Shopify is let's look at the balance sheet. This is actually really impressive balance sheet. So we've got this marketable securities here. I don't think this even includes, because this happened in May and this is ending in March. So you can almost bolt on another $1.3 billion here. They had a 1.4 billion plus another, call it billion. They had about we'll just call it 2.5 billion in cash. And then they bolted on another 1.3. So they've got like almost $4 billion in cash sitting on the balance sheet. And that gets you to these total assets here. Well, actually, these are our total assets right here of 3.5 billion, and most of it's going to be in cash because you see all these other numbers, they're not that much. Even this goodwill number is not that much. And so that's hefty. That's, 3 point, I mean, they have a hefty valuation of $80 billion. So, it makes 3.5 billion in assets not look that impressive. But I want to show you total liabilities. There's not that many liabilities. So we have $288 million in liabilities. There's some accounts payable here, some deferred revenue. There's the leases, they have to have employees and things like that. Add these up, and this is extremely low liabilities in relation to the asset side, especially when you factor in the bulk of these assets is in cash. So this company, is in extremely, extremely good financial situation. Now, you might want to question, well, why, if this was back in March, they were in a great financial position. Well, why were they in such a hurry to sell at $700 per share? Might just tell you what they think about the share price, and that they might think, oh, well, if we can get $700 per share, we'll sell some shares. So, doesn't make me want to run out and jump in and buy Shopify. Now, the reason why I can look, I've owned Tesla. Amazon is probably my largest position out of any stock outside of an ETF or a mutual fund. And so I can look past high valuations. The thing about Amazon is everybody uses Amazon, or almost everybody uses Amazon. Everybody needs a car. So I can kind of justify maybe owning Tesla. But I guarantee you ask 10 of your friends if they need or use a Shopify store in terms of being like a business that's running them. I guarantee you probably almost all 10 of your friends will say, no, I don't need a Shopify store. Whereas ask them if they use Facebook, ask them if they use Snapchat or Twitter or Instagram or any of these other things that everybody uses, and especially something like Amazon. So Shopify is a niche product, okay? It targets business owners and business websites. So that's why I'm not super, jumping on board with this stock, because this valuation is hefty and this is not a product that everybody uses. It's not an API. It's not a search engine. It's not a social media site. It's not a car company. So I have to hesitate a little bit. Now, I do see shares kind of making a rounded top here, and we've seen that before a few times. And again, I'm not rooting for these shares to go down because I'm rooting against this stock. I'm rooting for it to go down so I can buy a few, because I do see value in this stock. Just at $86 billion, when we're projecting to do, call it, give them credit, $2.5 billion. Okay, you're paying 40 times just revenue. You're paying 40 times revenue just for basically an e-commerce website stock. So, which has plenty of competition out there. We see that Facebook is getting into kind of more of this type of business. Obviously, there's other ones like BigCommerce and Magento and Amazon, I guess, and eBay. You could throw those guys in there, although Shopify kind of integrates with those. Now, Shopify is going to get bigger. They're going to do other things. And so I think that's what you're betting on. If they just continue these business models here that they have going on, these two, they're going to have to bolt on some other stuff here for this stock to continue to trade at this type of valuation. That's just my opinion. So we'll see what happens. But I personally would wait to see if these shares are going to roll over. We had a huge run up here. I think you're going to see some profit taking. The company itself was sure eager to sell shares at $700 when the balance sheet looked pristine to me, and everything during the quarter looked just fine. These sales, all this stuff, this is a minimal net loss, when you compare it to how much money they have in the bank and compared to previous years. This company was eager to sell at $700 per share. And so that kind of makes me wonder, well, what do they know? Maybe I shouldn't be as willing to jump in there and buy. So I could see these shares, hanging down here at that $600 range. I'd be a little worried about that because they'd be hanging on a cliff here. I don't know if we'll retest these $300 lows. I could see us retracing all the way back to this $530 range. That's where I definitely would seriously consider taking a bite out of Shopify. But right now, little rich for my blood, considering I already have exposure to stocks like Amazon and Tesla, which are also richly evaluated as well. So there we go, Shopify. Hopefully you guys enjoyed that. If you have a suggestion for the channel, any stock you'd like me to cover, please leave me a comment below. I'd love to hear from you. I try to get back to everybody that makes a comment. Hit that like button if you like what we're doing, and that subscribe button as well. We'll see you guys soon. Good luck with your investments.